Right. So, well, I don't think the street was expecting the industrial group to be lowering guidance, maybe maintaining guidance, but not lowering. So 3M actually lowered, and while they pointed to a shift in currency, there were bigger problems.
Let's just say the shift in currency. They've said that it is now going to be a headwind of 5 cents, where they were expecting a positive tailwind of 10 cents.
It's a 15-cent swing, but it was like a 25% cut to their outlook. So,
right.
So there were other problems, I think.
25 to 28 cents to the outlook. So what happened? What are the other problems that really popped up here?
Well, I think you're seeing a very weak top line for 3M. Others in the industry are growing, 6%, 7%. 3M came in with 1% top line growth.
Is this a 3M specific problem then? What are they doing wrong?
Well, 3M ebbs and flows. It's a very consistent company over time, and the sell-off might well be a good buying opportunity because they're generating a lot of cash, and historically that's been the problem, not meeting the estimates, but generating more free cash than net income. So we'll see what the management says, but this could be a buying opportunity.
But could their revenue results be an early tell for other parts of the market? It's often seen as a bellwether. I mean, should you be worried about something bigger happening here?
Well, Caterpillar is down sharply, but their revenue was up 15%, and Lockheed Martin.
I think Caterpillar may be a different story.
Right. Caterpillar kept their earnings guidance, but it actually is lowered because they're benefiting from a tax gain that they put into the guidance.
So you're saying we should be going off of not the adjusted guidance that they gave us of $11 to $12 a share, but off of the real earnings per share guidance?
I think it's a bit of a signal that they're struggling to hit their expectations. It's still good growth, but it's not as good growth as it was a couple quarters ago, and that's probably going to slow down into 2019.
Does it warrant a 7.25% decline in the stock price this morning for Caterpillar?
Probably not. They did point to a weakness in Latin America, and that's been a good growth market to them. Obviously, there have been economic problems in Brazil and Argentina. Mm-hmm. If that turns around, could be that buying opportunity.
Just very quickly, in their outlook, they say very specifically, most end markets continue to improve. Order rates and backlog remain healthy. In the fourth quarter, price realization, operational excellence, and cost discipline are expected to more than offset higher material and freight costs, including the tariffs. You would think that that's exactly what the street wants to hear, but it's not enough. So
they're managing. But again, Becky, what you've got is, maybe revenues were growing 40% a couple quarters ago. Now it's 16, 17%. What's next year going to be?
John, what rating did you have on these stocks heading into this?
We've had buys on 3M and on Caterpillar.
So this caught you by surprise, certainly, right?
Yeah, we'll probably be bringing our estimates down a little bit, but again, for the long term and for the portfolios that we're building, these are pretty good core stocks.
Well, they look like a better buy today if they're down 6 and 7%.
Yes.
Let's talk very quickly about the defense names, because those names are some that are trading higher today. Lockheed Martin and UTX, also a little better than expected.
Good time for defense stocks, right? There's no sequestration. The 2019 budget is already finished, and President Trump is encouraging our allies to buy more, U.S. defense goods. So these are good times for defense.